Hello ladies and gentlemen, and a very warm welcome to today's webinar, which is brought to you by Shared Services Link and sponsored by EXL. I'm very pleased that today we're focusing on how to achieve balance sheet integrity. So my name is Susie West and I am your host for today. I'm the founder and CEO at Shared Services Link. And as many of you know, we are a business network which is connecting people, leaders in finance shared services and also outside finance shared services, procurement shared services and HR shared services, with the intent to make sure that they improve their business performance. And we're very pleased today that this webinar is actually very much geared to serving that purpose. With me today as my guest speakers, I have Glenn Baker, who's VP F&A Centre of Excellence at EXL, Tammy Coley, who's Executive Director, Enterprise Accounting, Financial Systems and Compliance at Cox Communications, and Susan Parcels, who's Director of Finance Transformation at Blackline Systems. You, of course, have a very, very important role to play in today's webinar and what you get out of it, and that is to make sure that you get the answers that you're seeking from this investment of your time. So do place your questions to me nice and early. The answers might come throughout the course of the session, but should they not, then I will make sure that I put those questions to our panelists in the last 10 minutes of this webinar. Let's have a look at the agenda for today. I'm going to be touching on context shortly, and then I'm going to be handing over to our guest panelists, and then Glenn will be taking this session to a summary, and then we'll be taking your questions. So just before we move to the context, let's just start with two back-to-back polls. They're the only polls that we've got for this webinar today. Coming up on your screen right now, on what day do you close your books? So is it working day 1 or 2? Is it working day 3 or 4? Working day 5 or 6? Working day 7, 8, 9 or 10? Or is it working day 11 or maybe even later? Once I've closed down this poll, we will be sharing the results with you live. So it's great benchmarking for you and good information coming back. You can see the results for yourself. We have a bell curve there for you. 11% of you closing on working day 1 or 2. 39% on 3 or 4, 25% on 5 or 6, 14% on 7 to 10, and 11% on working day 11 or later. Interesting results. Let's have a look at the second poll question coming up. Which areas are you actively looking to improve right now? Is it the automation specifically within this area? Is it process improvement that you're after specifically in this area? Is it the reporting in this area, data accuracy, or maybe something that hasn't actually been captured in this list? It's quite interesting. We have a very clear winner there, and it's 63% of you are saying that it's the process within this area that you're proactively looking to improve, followed by 2 in second place, the automation in this area, and the data accuracy, and then reporting comes underneath that. So very interesting results. So let's just touch on the context before I hand over to our first speaker. And it absolutely goes without saying that financial integrity is unquestionably front of mind for the finance function and clearly for shared services organisations, for all kinds of organisations. A lot of the organisations that do shared services are the large multinationals like Cox Communications that we have on this call today. And therefore, the data within the balance sheet must be presented to the organisation in a timely, accurate and absolutely credible way. It must be 100% credible. And so I'm delighted that this session is looking at the systems, processes and the best practices that you can actually deploy to make sure that you've got that accuracy that you're seeking. So with that in mind, I'd like to introduce our first guest speaker, Glenn Baker, VP F&A Centre of Excellence at EXL. Over to you, please, Glenn.
Thank you, Susie. So today we're going to cover off a few topics, and I want to expand on what Susie's initial poll had indicated as well. So today we're going to look at how firms can report data and keep pace with regulatory requirements, all that while containing cost, decreasing risk, leveraging platforms, and harnessing processes to get the most out of your operations and achieve balance sheet integrity. In the next couple of slides, we're talking more in depth about the matters related to leveraging platforms, harnessing ops, and getting the best out of your operations. And as we move forward through that, we do have a survey that was performed by the IT group And the interesting piece about this survey was that it detailed out the different competing needs for the regulatory requirements related to balance sheet reconciliations. Interestingly enough, this has now hit the top 10 priority for firms. So that's something that over the years has changed, and part of that reason is that this is now something that affects the close on a regular basis. It affects timeliness on a regular basis, and it's also a project that is timely in terms of being able to interface and comply with the current technology development for all ERPs and financial systems. When you look at the listing on this slide, it's listed in terms of least to most relevant. So clearly, first and foremost on the minds of most are regulation, and 45% of the attendees to the survey had indicated that regulation and regulatory requirements were key for them to comply. Then as we move to the more important topics of how do you get the system in, how do you mine the data that's in the system, and then also how do you structure the business so that it can fall into a hierarchy for compliance. Those are the key aspects that were key to the survey. What this is spelling out is that it touches three main topics. So it's technology, it's the people that perform the process, or the operations folks, and then lastly, it's really around the systems and how you can intertwine those systems and create a system that is a cohesive arch of the transaction system. When I talk about the reconciliation process, I just want to make sure that we detail out that in today's finance world, there are front-end and back-end systems which feed the financial process. While the systems may talk, they don't typically or naturally reconcile between them. And that creates a fallout from the process, and that fallout has impacts both in terms of technology, timing, efficiency, and others. Without process and systems, the ability to enforce rules for financial integrity is challenging, if not impossible to overcome. So a program around reconciliations is necessary. The contributions to the process span the globe for most firms. So it's, you have folks in the field, you have folks in corporate offices, all feeding this process. And then lastly, a well-designed approach integrating the realities of operations. So the fact that some of this information will reside out in field systems that you need to pull in, and then addressing the topics around material weakness and how to identify weaknesses and inefficiencies in the process to ensure that your integrity of the process is maintained throughout. With that said, we're going to touch on some of the technology aspects, and I'm going to pass it off to Susan from Blockline to cover some of those topics.
So let's first start talking about some of the best practices around account reconciliations. And I'm sure that most of these are going to be familiar to all of you, but we'll go ahead and cover them quickly and then talk about some of the challenges with trying to address these. The first one is rigor, and it's making sure that your account reconciliations are constantly reviewed and improved upon. And this really can be a challenge because, of course, during the month-end close, there's pressure to get the books closed faster and faster, and there's other demands that are being placed on the accounting and finance teams. And it makes it difficult to spend time trying to make sure that the account reconciliations are given enough review and true diligence around them. We want to make sure that they're all complete. No account is left behind. You want to make sure that they're all accurate. We've already mentioned diligence. And then, of course, compliance and ensuring that those support the appropriate accounting principles. Now, one of the challenges that often comes up is we've got a lot of information that comes in. You've got information coming in from your ERP system. You've got other data that's coming in, whether it's bank statements or other types of reports, maybe payroll reports. And all of that information is feeding into the accountants and the preparers. They go through and book your journal entries and prepare the account reconciliations. That then goes over to the approvers and reviewers to look at. Maybe even for some of them, account management looks at some of those if they're higher risk or high volume. And then ultimately, those get filed away. Maybe you've got binders with all of these journal entries and account reconciliations, and maybe you've got file cabinets. Ultimately, the auditors may come in and start asking to look at some of these things. You may even find yourself faced with having to book a late journal entry. And On the journal entry, you could run into a situation where maybe if you've got multiple GLs and you've got a consolidation system, if you book that to the consolidation system, it might not get pushed down into the GL that it's supposed to be pushed down to, and that could cause some problems. So overall, you've got all of this information that's changing hands, and ultimately, you might wind up feeling a little bit frazzled. You might have a lot of paperwork in front of you, and you might be able to relate to this gentleman who's sitting here faced with stacks of paper and, you know, kind of this common close practice. So now let's talk about what some of the challenges are. A lot of these processes are very manual and time-consuming to put together the reconciliation. They're often reliant on spreadsheets. And that in and of itself can be a cause for concern because they often have errors. There's little to no standardization. I've seen a lot of times where maybe one person puts together a prepaid and it looks one way, and somebody else puts together another prepaid and that looks completely different. There's also lack of visibility. A lot of times if you've got lots of accounts that need to be reconciled, to truly be able to see and understand where things are, what's been done, what hasn't been done, what are my outstanding required adjustments, what are my open items, have they been cleared on time? That can be a challenge. For some companies, they see unclear ownership and workflow. We already mentioned that there's lots of supporting documentation, binders. Policies and procedures are often outdated or may even be non-existent. You may not have an account reconciliation policy that tells your accountant what amounts to write off and who to go to for write-off approvals, and the procedures may not be there so that if for some reason one person is out sick or there's an emergency, somebody else will be able to pick that up and understand what needs to be done. So, you know, yes, all of these are challenges, but really, where's the real risk? Well, when we talked about the spreadsheets and the fact that they can have errors, you'll see here that I've got 80% of spreadsheets have errors. And I put a little sample on here, and you can quickly see I highlighted the total there. And at the end of it, you'll see that plus 1,000. I have seen this numerous times where there is a hard-coded formula. There's no indication of what that $1,000 is. Nobody knows why it's there or whether it should be there. There's no notation of it. But that could be one of the risks. And when you've got large spreadsheets and there's a lot of data in there, it's hard to find those types of things. We also have, where you can see the other arrow shows the WITTB. I always kind of laugh at this. One of the creative accountants that I worked with put that on there, and when we investigated it, it means what it takes to balance. Kind of scary, actually. The good news is that there is a better way to handle account reconciliation. So when we think about account reconciliations, you know, some of the common things are we need a GL balance. We need to know what we're reconciling it against. We need to understand what our identified differences are. We need to have the supporting or reconciling items and documentation associated with it. And then we need to have a way to certify that, to say that once we've gone through and performed this reconciliation that the balance is accurate. So let's talk about now really leveraging platforms and figuring out a way that we can make sure that you know, we've addressed some of these challenges. So one of the things that we want to do, of course, is to increase visibility and control within the financial close. Things like dashboards and reports, a central repository to hold your documentation, automated email alerts, and standardized templates are some ways that we can increase that. We also want to increase the quality of our account reconciliation. We can do that by using predefined templates, having customized review levels, and being able to categorize accounts into key and non-key so that we can focus on the accounts that are key or higher risk accounts. And then, of course, we always want to try to reduce the cost. So when we are going through the close, anything that we can do to automate populating the templates, populating the balances, performing auto reconciliation, controlling access. Now, when we think about the overall process, one of the things that I mentioned was that we've got all of this information that's out there and all of these different people that need to access that information. And one of the nice things that we want to try to do is take all that information, put it into one central location or repository that then all of the people that need to access that can go ahead and access it. And it's all of the processes across your month-end close, whether it's your journal entries, your month-end close tasks, your reconciliations, all of those we want to put together. When we do think about kind of the overall close, there's a lot of different pieces that go into it. And I don't want to spend too much time here, but just to kind of highlight that, when I talked about being able to access all of these different activities during the month-end close, you can see here that there are a lot of activities that you can automate and could put in the central repository so that you've got some better visibility around all of the processes, as well as some central location. You've got some efficiencies because all of these activities can now talk to one another. And so it helps not only from an efficiency standpoint, but then also from a control and visibility standpoint as well. Let's go ahead and talk about world-class process. So when we think about, how do we make sure that our account reconciliations are world-class? The things that we normally think about is standardization. We want them to be consistent across the organization. We want good control around them. We want to make sure that we have the right people doing the right things around them, whether it's preparing them or reviewing them. We want to have visibility around them. What's been done, what hasn't been done, where are our risks around those account reconciliations. We want to have training available for our accounting staff. We want to make sure that they really understand what's going on in those accounts and aren't just going through the motions, taking the GL balance and then putting this amount over here, but really, really engaging and understanding what's going on with the account. And then, of course, we want to make sure that we've got updated policies and procedures. I'll just cover a couple of these in a little bit more detail. The first one is standardization. As I mentioned, a lot of times we see that you may have one person prepare an account reconciliation and it's a prepaid and it looks the same way as somebody else's, or you may find that another prepaid looks completely different. You may also see situations where maybe somebody has done a roll forward when a roll forward really isn't appropriate. But there's these standard templates, depending on the type of balance, that help to guide the accountants so that they know exactly what information needs to be provided, how it needs to look, whether there needs to be amortization done, or whether there's a calculation that needs to be performed, such as in an allowance for doubtful accounts. So visibility. We always say a picture is worth 1,000 words, and maybe this will look familiar to you. This is just a standard reconciliation checklist where they've got listed all of their accounts and who the preparer is by month and who the reviewer is. And, as from a management perspective, this is kind of hard to look at and figure out what's been done. You really have to probably take out a ruler and figure out which accounts are still open. Wouldn't it be nice if instead you could have an automated system that would take all of those thousands of lines and sum it up in one neat chart? You'd be able to see quickly what's not prepared, what's prepared, what's been approved. And not only can you see the number of accounts, but more importantly, you can see the balance as well. Sometimes it's not as meaningful just to see the number of prepared items. It's as meaningful to see what's the balance of those. Maybe if you've got 20 but they're a low balance, well, okay, you're not going to be as worried. But if you've got 3 accounts that haven't been prepared and those have significant balances, that might be cause for concern. Here you can see the before, and it's a little hard to see here, but the idea is that, again, we've got all of this supporting documentation. You've got other spreadsheets, maybe you've got some emails, and by the time you put this packet together, you've got all of these papers, and you've got to try to tick and tie and make sure that it's all real supporting documentation. Whereas if you use an automated system, you could all have it right there in one clean spot. Now, some of the additional benefits, includes this, I mentioned auto-certification for low-risk reconciliations. That's basically saying, you know what, if my GL matches my subledger, there's no need to perform that account reconciliation. If I've got a zero balance account, there's no need for somebody to perform that reconciliation. We talked about the template-based process, the supporting documents, the approval workflow. The nice thing is that once that preparer is completed the reconciliation, then the approver can go in, and you've got the audit history behind that so that you can see exactly when it was prepared and when it was reviewed. There's automated email alerts. Hey, you know what? When somebody needs to get something done and when the preparer has completed theirs, you can have an email sent to the reviewer so that they know to go in and perform that review. Of course, we mentioned reporting. Having that centralized global access. Everybody's busy nowadays. They're out and about, and being able to log in automatically online to see what the status is of the close is a fantastic feature. For those of you that are maybe multi-currency, multi-language, that's another feature that's nice to have. And it's easy to integrate with some of your existing ERP and GL systems. And with that, I'm going to go ahead and turn it back over to Glenn.
Thank you, Susan. I want to point out some things as we move forward into harnessing the process, and with that comes the pairing of both some of the things that we saw in the initial poll. So one was that we saw that technology had a play here, and then the second was that process had a play here. And in order to harness that power, we need to do a couple of things towards the best practices and move towards best in class. And how do we do that? So first and foremost, we need to look within the process for things that require analysis, things that have manual handoffs, and things that cause duplication. And what we need to do is we need to look at those items and declare them as automation analysis candidates. So we need to look at those, bucket those, and then address those as we move through our journey. When we look at things on the identifying manual processes for automation, throughout all of these handoffs, there are going to be both systems as well as people as well as files. And we need to look at the ways that those move through the system, apply the technology, which is a system like Blacklines, but also, as we move through the journey, do the things that Cox Communications did, which was look at the process, address the policies, and then plant different areas throughout the organization, different aspects as to how they can move forward to get to where they're going in terms of automation. Not necessarily that all of those things can be automated, but you need to have a holistic view of the process to do so. You have to look at the process end to end. So the system will address the arc of the transaction, but when you're in the process, each of those pieces need to be looked at individually and then pulled together to look at the sum of the parts to create a whole process. And that process has to keep in mind things such as regulatory requirements, audit, internal, both external and internal audit, and how does the process perform? So one of the things that often is an issue for firms is applying benchmarks to their organization. How do I perform compared to my peers? And in different industries, there are different requirements for reconciliations. And when I say requirements, a professional services firm may have a very different reconciliation from a manufacturing firm. So applying some of those benchmarks in a universal fashion is difficult. But if you pick the pieces of the processes that are relevant and then apply yourself to those benchmarks, you get a very good view of where you stand, both in terms of efficiency and the cost aspect of it. One of the things that we always recommend is you don't necessarily need to rush in. So you're going to learn a lot about your process applying a piece of technology to it and working within the confines of that system. And when you do that, you can then really learn a lot about your existing system, both strengths and weaknesses. And as you're moving through your evaluation, looking for the best fit is difficult. So there's a lot of criteria, both in terms of, do I take a technology that I host? Do I take a technology that is hosted for me? Is this a technology play? So most view this as a finance play, and technology is an enabling operation, and it's led by finance. If you do that, is your organization prepared to move forward with a project of that type? And then last but not least is have a strategy planning session. Most of these systems will affect the entire organization, especially when these reconciliations are pushed out into field offices and then consolidated and rolled up into a central office for close. When you're doing that, you need to incorporate the thinking and the mindset as to where the data is coming from and going to, and where you're going to actually centralize that to. When you talk about experts, experts are required to do a project of this sort. Most of those experts will reside internally, but they need a Sherpa to guide them along this journey, and that's the process that you need to look at. When we talk about how the benefits of harnessing the process, the key things, and these are standards that you will see across all of the presenters today. Consolidation. So how do I get it into a consolidated view? A consolidated view has multiple benefits. So first and foremost could be a cost benefit. The cost benefit of not having to have auditors tramps through the organization to try to find the data because it's all consolidated into one central point. The second piece is centralization. So tying back to the earlier slide, how do I get that information and bring it in from those field offices and then standardize it? And when you bring centralization, you really have to have standardization side by side or shoulder to shoulder. And that standardization is key. So imagine a world where you have 6 templates that manages all of your different reconciliations, and the vision of how to get there, and how you bring them in, and how you roll them in from those remote offices or into a central environment. The key there is that you will be able to then have everyone singing from the same hymn book. You will improve turnaround time, so you won't chase the close. The earlier poll, which indicated that most were closing between 3 and 5 days, there should be a caption after that that says "with heroic efforts," right? Because most are having an extraordinarily heroic effort to get that close. But if you can do that in an orderly fashion, and you're going to hear this from Tammy at Cox, and then improve your turnaround times, and lastly improve accuracy as you're doing that, so that there's not as much rework. Then you've really you've changed the process, and you're really harnessing how process should work. The second piece to this is, how do you really get the most of your operations? How do you have your operations folks drive this process? Most are so deep into the process, it's very difficult to step back and move the process forward. But once you have a central system and a process laid out, you can use the information you have to optimize. So it won't be perfect state when it first happens, but then downstream, you now have a single collection point for data. And that data can be used to do things like analysis on journal entries. Why do we have so many? Why are they so complex? Why does it reach and span across so many pieces of the organization? How do I embed analytics into my process? How do I look at this and say, how do we make this more efficient? If I have 30,000 recs today, how do I get it to 10,000 recs? And as you move through, that data will tell you what you need to do and where you need to go, specifically when you're monitoring it on a timeline, when it's in a system. So you're able to see in a snapshot in time the arc of that transaction. Lastly, when we talk about results. So results are what we all desire from this process. How do you get the results that you need from the process? So first and foremost is you need to get out of the reaction mode, and that is very common within the reconciliation process. Most of it is reactionary. You're getting fed a piece of data, you do something with that data once you get it. But the once you get it is where everything slows down. So how do you achieve results? First and foremost is get the information into a system. Then you can drive proactive exception resolution throughout the process. And then the last piece to that proactive piece is, why do I even need to touch that transaction? Is it something that is of lower value and I can automate it so I don't even do that rec anymore? And when you take that out, that's just pure efficiency into the process. And that's done through both systems as well as process. And then when you look at things along the lines of journal entry automation, how do I pass it to my system? Can I do that automatically? Can I have all of my support material for that in one place that's auditable, that I can bring in an auditor, have them sign in, and go through the process efficiently and reduce that cycle time? With that said, I've referred to Tammy at Cox a few times. I'm going to pass off to Tammy and allow her to share the Cox story with you.
Hi, well, let me start out with giving you all an introduction to Cox Communications. We are privately owned. We're the 3rd largest cable and broadband company in the U.S. We have about $9.6 billion in revenue and about 6 million, a little bit over 6 million in terms of subscribers. I want to take you down our road to improvement, so our accounting transformation timeline. And I won't hit every single box or everything we've done over the years, but I will try to hit on some of the ones that I think will be more important to you today. We have really worked and partnered hard with Blackline and with EXL to really improve our processes to deal with the challenges that both Glenn and Susan have talked about earlier on this call. So we started out in 2005 and 2006 really with our reconciliations. And so our auditors had pointed out to us that our reconciliations were one of our 7 deadly deficiencies back in 2005. And from that point, we decided that we really needed to put a lot of focus on our reconciliations. We found, just like Susan had talked about, we found that some of our people were doing roll forwards and not reconciliations. We also had some situations where we had people reconciling the general ledger to the general ledger. That was pretty funny, or it wasn't funny at the time, but we can laugh about it now. And so we were able to go in and use Blackline to really, as a company, do a better job of learning more about our reconciliations and how they really should be done versus some of the errors that we were making with reconciliations in the past. Our standardization and automation of our journal entry and reconciliation processes, it was over a couple of years that we were working on this effort, we identified all of our subledgers that feed into our reconciliation processes. And so whether it's our accounts payable subledger or our fixed assets subledger or accounts receivable subledger, we identified all of the different subledgers that feed into our reconciliation processes. And we automated the feed from those subledgers to Blackline. And I think Susan spoke about it some earlier. We were able to automate those feeds, and then the general ledger is also automated, and Blackline automatically compares that subledger to that general ledger and auto-certifies those accounts. Before Blackline, my team was spending a great deal of our time just getting to the subledger balances, just getting the general ledger populated properly on the reconciliation, going and plugging these numbers into Excel spreadsheets, versus now all of that part of the work being done in an automated fashion, and now my team can spend their time on looking for those out-of-balances and those reconciling items, but not just trying to get to the subledger and the general ledger balance. So we're very excited about that. We've also, over the years, in 2007, we implemented Blackline's matching module, which also helps us tremendously with our reconciliation processes, especially when we have accounts with high transaction volume. So things like our cash account, for example, before Blackline, our cash accounts were, I'll just say, they were a huge struggle for us because of the high volume of transactions, and tools like Microsoft Access that we'd used previously for some of our cash recs, those tools bombing out on us at times, or most of the time bombing out on a very bad time. You get most of it done, and then, oh my goodness, it crashes. And so being able to have a tool like Blackline that can automatically match those transactions and being able to set up rules to allow those transactions to match, and then pull the transactions that don't match into the reconciliation automatically, has been a huge time saver for us and a much more efficient and accurate process for our reconciliations. It's not just for cash reconciliations either. It's for any reconciliation where you need to compare 2 data sources, and in the event that the 2 data sources don't match, or you have transactions that don't match between the 2 data sources, that then is the information that feeds into the reconciliation process. Also, in 2007, we implemented the task module of Blackline, and the task module has been, again, just a huge time saver for us, but it's also just been a great way to organize our entire monthly accounting cycle. Imagine a monthly accounting cycle where you have each of the tasks that need to be performed by each of the people on your team, each of those tasks clearly laid out in a tool in Blackline with the owner, with the due date, all the way to what time that task is due, and being able to manage through that monthly accounting cycle with those tasks laid out, and with the reminders, letting people know when your task is due. It's just been huge in terms of our ability to keep things rolling in our month-end close process. But also, we use the task module of Blackline for our auditors, both our internal and our external auditors. So I don't know if you guys have experienced it before, but I know that there have been times when an auditor may ask us for something. Maybe we give them what they've asked for, or at least we think we've given them what they've asked for. Then they come back and maybe we think they're asking for the same thing again, or it could be that it may be a little bit different request, or maybe there's a miscommunication there, and we start to feel like sometimes things may get lost from auditors. Either way, when you use Blackline tasks with your audit, the auditors actually set up the task in Blackline, then we assign that task to someone on our team. We also assign that task to an approver on our team, and then the auditor is the reviewer. And so at that point, it's in a tool, it's very clear what we have provided, and the auditor has an opportunity to let us know whether that is what they wanted or not by decertifying the task and leaving us a comment to let us know if they needed something different. So we love the efficiencies that we've gained in our audit from the task module of Blackline. I want to point out, I know this call is about balance sheet integrity. I want you to know that from my perspective, balance sheet integrity comes from an entire monthly accounting cycle integrity. That in order for our balance sheet to have the integrity that it requires, we have to have good processes around our journal entries, and we have to have really good processes around our reconciliations, both of those, and manage through the entire process through something similar to something like Blackline's task module. In 2008, we were able to centralize our accounting, and we were able to centralize our accounting because we had done all this good work around the standardization and automation of our journal entries and reconciliation processes. So prior to November of 2008, we were very decentralized with our accounting. We had about 21 locations, each with their individual accounting groups, each performing similar reconciliation processes and similar journal entry processes, and a lot of times the same processes being repeated multiple times throughout the country. When we went through and standardized and automated those reconciliation and journal entry processes, that really made our processes a lot more efficient. It reduced the amount of work that we needed to do. Our number of manual journal entries at that point, when we centralized the accounting, went down from around 3,000 to about, I think it was less than 1,000 a month. And so a lot of efficiencies gained from being able to centralize that accounting, and the way we were able to get there was largely through the use of Blackline. In 2009, we centralized and outsourced our AP function, and in 2010, we went through an effort to really zero in on our AP transactions and the exceptions that were being generated from the process and really making that process more efficient. We worked very closely with EXL to really optimize our AP processes, and I'll show you some slides a little later on that will show you just how efficient we've been able to get with our AP processes with EXL. In 2011, we focused on our journal entry processes. We started in 2006 focusing on our journal entries. Tell you a little funny story. So back in 2006, before we implemented Blackline, our journal entries weren't really, I guess a lot of companies maybe have a binder with all of their journal entries in numerical order. We didn't even have the binders, and so at Cox, before Blackline, and before we had Blackline as a central repository for our journal entries, basically when the auditors would come in at the end of the year and ask us for a particular journal entry, it was a game where we had to figure out where was the person sitting when they actually posted that journal entry 5-6 months ago, which desk were they sitting in, and that would get us to which files would that journal entry be in. So I know that's a little bit humorous, or maybe a lot humorous, but that's kind of the way it was. We didn't have one big binder. We had to go and find the desk that they were sitting in, and then we would go to the files in those desks and figure out where that journal entry was, the support for the journal entry. And so that's how bad it was in 2006. We definitely took a huge step forward by having Blackline as a central repository for those journal entries, which also supporting our reconciliation processes. But then in 2010, we implemented Blackline's journal entry workflow, adding even more efficiency to our journal entry processes. In 2011 was when we really started to go beyond accounts payable in terms of outsourcing, and we started to outsource more in terms of outsourcing our reconciliation processes. And so EXL partnered with us very closely in 2011 to do an excellent job of helping us get our reconciliation. We already had automated our reconciliations. We'd already centralized them here in Atlanta, and now EXL helped us to take that next step by being able to outsource those reconciliations and freeing up my team here at the corporate office to focus on other value-added activities as well. We also, I want to point out that Blackline also has a bulk journal functionality that helps when you have a situation where you have the same journal entry that you're performing month after month after month. It's a part of those manual routine processes that a lot of companies have, or I think we all have, as it relates to accounting, where we're pulling that same report, multiplying by those same percentages on a monthly basis. Bad debt is one example where you pull that aged receivables report and you have these percentages that you're multiplying by and for each of the aging buckets. This is a type of journal entry that is just a recurring process that Blackline's bulk journals, you can pull that data source in the Blackline, you can set up the rules and the calculations, and so that data source automatically comes in, the rules are automatically applied, and that journal entry can automatically be posted for you. We've just seen great efficiencies from using that tool as well. One more thing I wanted to point out from this particular slide is using Blackline tasks for our internal controls governance. So another key component of the integrity of our balance sheet is making sure that we have good and effective internal controls. In 2013, we have started using Blackline tasks for our internal controls governance. And so if you can imagine a world where each of your internal control owners, the people who are responsible for that control activity, have a task in Blackline that they certify on a quarterly basis that attests to the fact that they understand the control activity, they understand the risk to the financial statements if that control activity is not properly executed, and that they are certifying to that on a quarterly basis. This gives them an awareness rather than just waiting until an auditor, whether internal or external, comes and tests whether that control is working or not. We have a program that we've implemented company-wide that gets to those control owners and educates them on the risk and the control activity, and we all get in alignment before the auditor comes to test. So let me just go through some of the things that we've done in partnership, more of the things we've done in partnership with Blackline and EXL. Our reconciliations, today we have 81 to 84% auto certification, so we don't have a lot of manual effort around our reconciliations. There's clear ownership. In the past, before Blackline and before we centralized accounting, there were times when an auditor would ask for a reconciliation, and if the auditor asked someone at corporate, they would say, no, the field does that reconciliation. And if the auditor asked someone in the field, they would say, no, corporate's responsible for that reconciliation. So now with Blackline, of course, there's clear ownership, standard format, the email alerts reminding people when their reconciliations are due. Our documentation is attached right there, so no hunt looking for the documentation. With the journal entries, 93% reduction in manual journal entries over the years. The approval workflow making our lives so much more efficient with the documentation attached. Again, rather than going to people's file cabinets individually looking for documentation, and much greater visibility into our journal entries. With the task, we've got the email alert reminders, clear ownership with the task, clear due dates and the times that they're due. I'm setting up the recurring frequencies, and so it's on a cadence, and you're not having to set them up again and again and again. Once it's there, and it repeats itself based on the frequency. Setting up task dependencies, so everybody knows this task can't be done until these dependency tasks can be completed first. And then there's also the task checklist. You can customize what you want that preparer or approver to certify to. With the matching, I talked about this some. You have the reliable data sources, the very flexible pass rules, large volumes of transactions are handled very easily, and then being able, once you've matched the transactions, being able to automatically send those reconciling items to the reconciliation. Again, we already talked about the bulk journals, but that saved us a ton of time. We have one bulk journal that posts around 14,000 lines in terms of the expense and the liability accounts that are being recorded, and it's about 14,000 lines, and Blackline takes care of that journal entry for us in a matter of seconds. So we're very excited about that. The variance module we use for working capital variance explanations for our month-over-month working capital variances, as well as our actual versus forecast. Having that documentation for our working capital variances in one central repository has just been awesome for us. It's the same thing for the reconciliations, the same thing for the journal entries. If you don't have a central repository, you're looking for things, you don't know where all of your support is, and it becomes a nightmare of trying to find things when you need them. Again, let me reiterate, we centralized our accounting in 2008. We outsourced a lot of our accounting processes starting in 2011, and we continue to look at our accounting processes and look for opportunities for outsourcing. Our accounting teams are able to focus more on the non-routine accounting and the accounting analysis before we close the books, focusing our efforts on making sure the numbers are right before we close the books. I want to just be able to share with you some of the results of a benchmarking study that we did early last year, where CCI, for Cox Communications, really, if you take a look at this, you can see some of the benefits of the work that we've done with Blackline and EXL over the years. If you zero in on the manual journal entry percentage, it's the 1, 2, 3, 4, 5th line down, 3%, so only 3% of our journal entries require a touch. So we're very proud of that. It's a very efficient process for us. The line just below that, where you see the percentage of journal entries recorded prior to the close period. Before we even get into day one of close, 78% of our journal entries are done. We do have a 3-day close. So anyway, the purpose of this slide was just to kind of show you some of the benefits through a benchmarking study, comparing us to 4 other companies and just showing you a lot of the benefits that we've been able to gain from, again, our partnership with Blackline and our partnership with EXL. So with that, I want to turn it back over to Glenn for today's takeaways.
Thank you, Tammy. So I think that the key takeaways from today, Tammy's story and the Cox journey certainly spells out the 3 things that are key. One is applicability of technology, getting the right technology, using that technology as it's designed, harnessing the process. So the technology exists, but you need to overlay the process on top of that. And then the last piece is your operations. So this isn't simply about slamming in a piece of technology and praying that it will centralize everything and it will work. It's about using that as a piece of the machinery to bring down the time that's required for your close, to ensure that you're more accurate. And if we look at the bullet points on this slide, you can really paste each one of these to one of those boxes on Tammy's timeline slide. When you talk about complete and accurate, we put those on the same line for a reason, because we know that a lot of times it's complete, but it may not be accurate. Those two come hand in hand, and the way that you achieve that is by designing a process that's going to produce the results for a complete and accurate transaction. The completed and final reviewed in a timely manner. So I want to paint a picture of something that I saw with Tammy while in the Cox offices. Tammy walking down a hallway with an iPad in her hand, looking at a dashboard of her close. An orderly close, one that she knew where everything was in the process. Who was an outlier? Who do I need to follow up with? She knows those folks because of that dashboard and that relaxed, I manage my close through tasks process. Supported by the appropriate accounting principles. So simply put, with the process, you have to overlay not only best practices, but sound accounting practices, and you need expertise to do that. That expertise may or may not exist internally. There's 2 practices. One is you have excellent accounting folks that are able to transform processes, and the other is I have great accounting folks, but they really don't have the ability to bring in all of those applicable and requisite compliance standards to make sure I'm meeting all of my regulatory needs. And what you can do is you can bring in a partner, both technology and operations, to pull those pieces together. And then lastly is constantly reviewed and improved. So once you get it into the system, as you saw, it was a journey for Cox. There was a time frame that this would happen over. I've seen clients do it in a more compressed time frame. I've seen them do it in a less compressed time frame. But the key is that there's a start point and then there's a journey to where you want to be at the end point. And the only way to do that is to use the information within the system and constantly review it so that you're able to get to the endpoint destination, which is a sound system, complete and accurate, with regulatory compliance met. With that, I'm going to pass it back to Susie.
Thank you very much indeed, Glenn, and thank you to Tammy and Susan. So let's move to questions. We've got 10 minutes. If you haven't already posted your question, please do so. Let's start with the first question. Let's put this one to, let's put this to Tammy. Any ideas of best practices around summarizing a large amount of SAP line items / journals into a reconciliation tool? Well, is it SAP to Excel to Blackline, or is it directly from SAP to Blackline?
Okay, This is Tammy. We actually use Oracle, but anytime we need to summarize a large amount of data, the matching module is the best module to use, in my opinion, to summarize a large amount of data and then have it feed directly into your reconciliation process.
Okay, Susan, would you like to add to that, please?
Sure. So one of the nice features is that, at least from a Blackline perspective, regardless of the amount of data and regardless of where it's coming from, that information can be pulled in, and it can be used if it needs to be for a reconciliation, such as pulling in, information from a bank statement, and let's see, a POS file, or if it's just information from a subledger into the GL. All of that information can be pulled in, and that's one of the nice features. And it doesn't matter whether it's SAP or Oracle. It's really ERP agnostic, as well as, as we mentioned, other data files can be pulled in as well, which can be used for the journal entries, like Tammy had talked about, the both journals that they use, as well as account reconciliations if you need to perform those in addition to that.
Okay, good. Thank you, Susan. I'll put this question to Glenn, please. Some elements of the balance sheet have an easily identifiable items to be reconciled against, i.e. bank GL to bank statements, fixed assets GL to fixed asset subledger, etc. Any opinion on what you should or could compare accruals and miscellaneous receivables GL accounts to?
I'll pass that one off to Susan, but I'll point out something that what you're pointing out here is basically what I call the low-hanging fruit for the reconciliation process. So the key is that you can, with data sources, you can have up to 3. You can do the matching between those. The second piece is that when you are doing those matches, a lot of those will fall into what I call the routine category. So when you're looking at routine transactions, those are items which can be matched out and rules set so that they're untouched in the long run. The goal is to not touch such routine types transactions. Susan, did you have anything else you wanted to add?
I think the only thing else that I would add to that is, really one of the main things that we're trying to get away from is just having people do a list of what's in their general ledger activity. That's one of the other things that I've seen a lot. My guess is Tammy probably saw that as they were going through their transformation process as well. And it's really ensuring that when these accountants are going through and performing the reconciliations, that they truly understand what is in the account, number one, and number two, making sure that it's appropriate. Just listing things isn't necessarily going to work. A lot of it is analysis, and one of the features is that by freeing up some of the time that they normally have spent in the past manually keying in things like the GL balance and subledger balance and whatever else, it allows the accountants the time to go in and perform the analytics necessary in order to truly understand, whether the account balance is accurate or not, and make sure that if you've got something where, maybe you don't necessarily have supporting documentation, you can perform analyses to make sure that whatever that balance is makes sense.
Okay, good. Thank you to both Glenn and Susan there. So this might exist within Blackline. Is there a real-time interface with the tool and the company ERP for a manual upload of push of data?
So there's kind of 2 parts to that question. Yes, it can be set up to automatically upload depending on your ERP system. Some of them we have a direct connector, which makes it very easy to do that actual import process. For the others, it's still a fairly simple process. It's basically just creating an extract file from your ERP system. That then goes out to a secured FTP site. And in Blackline, you designate how frequently you want it to go out and grab those balances, so you control that part of it. However, in the event that, let's say, for example, you realize that there was an error and you had to do a bunch of journal entries and you need those balances updated right away so that the accountants can continue to perform those account reconciliations or whatever their tasks are, a manual upload can be done at any point in time as well. So you have a lot of flexibility as far as how frequently you need to or want to update those balances. One of the other really nice features is that if you have performed account reconciliations already, but for some reason that balance changes, the system will automatically decertify that balance and notify the preparer that they need to go in and re-perform that account reconciliation, which is a great control.
Okay, good. I'm going to put this question to Tammy. Is this reconciliation done, Tammy, at a GL code level, or has the tool capabilities to reconcile data across flexi codes, cross codes?
So Blackline allows you to group your reconciliations in any manner that you would like to. So we have about 20,000 accounts, GL accounts, but we only have around 4,000 reconciliations because of the very thing that we're speaking of here, where Blackline allows you to group them in logical fashion and then reconcile them at a group level. So you can do either or both.
Okay, good, thank you. Tammy, you said that you use Oracle. Would you mind just clarifying which?
We're on Oracle 11i right now. I'm getting ready to embark on a upgrade to Oracle version 12.
Okay, thank you. Tammy, what were the main things that you did that resulted in the huge reduction of manual journal entries? What would you say were the one or two really critical things that happened?
Eliminating, I mean, it's kind of funny, I guess, but eliminating things that we shouldn't have been doing anyway, things like duplicative work, a bunch of manual journal entries that don't change over time, and so they should have been automated from the very beginning. Just looking for opportunities to reduce duplicative things or things that shouldn't be done, and then automating the rest.
Okay, good. And final question, and I think I'll put this to Glenn, if I may. Glenn, question from an SAP user. How do you actually, and again, we might have an obvious answer here, but I'll ask it anyway, how to automate the journal on SAP? Currently, this user uses a standard template. However, they need to feed the details like nominal, stroke amount, stroke text, posting key, etc. Could you advise?
Right. So within the system, we're able to not only take the information from your existing templates in, but also to apply those to the templates that exist across the system. If SAP is a standalone system, so if that's the only place that drives your reconciliations, and there's not a front-end system to do that, that's a single feed. Normally, there is multiple feeds coming into the system, so you would extract that standard template, which is beneficial in terms of the Blackline interface because you're now taking something that is already standardized into the system and then playing that out across multiple different types of reconciliations that could occur within Blackline.
Good, thank you very much. We are out of time, so if you would like to get in contact with Glenn or Susan, their contact details are there and available, and many thanks to both of those speakers and also to Tammy for sharing her fascinating story with us. If you would like to meet EXL, they will be at most of our events coming up over the next few months, so please make sure that you register nice and early for those. We do have a few tickets left at the US Summit for Leaders in Finance and Procurement Shared Services in Chicago, taking place in May. We look forward to welcoming you next time. Thank you and goodbye.